Hey guys, my name is Max Convexity. Hope everyone's having a good day. This is your midday high yield ETF report. So let's see what's going on. We'll start. I don't know where we're going to start today. Where do you think we should start? We're going to finish with the buffer report. Let's start down here at the 5-minute max spreadsheet. That's what it's for, to make things faster or to be able to look at a large amount of data in a short amount of time. Okay, so over here, the first two columns on the left, ETF change and parent asset change or benchmark change. Right here, we have three of our funds that are leading. Three of the defined funds, or four of the defined funds, are actually leading the parent asset or benchmark. Okay, these are the points in the money that the options are right now, and we sell options on this fund, so that's being in the money is bad. They always talk about options from the perspective of a buyer. But anyway, this right now is the current profit and loss for these three funds. Right now, USOI, I don't know why this one isn't working. I need to work on that one. I'm sorry about that. I forgot to work on that. In any event, my dividend estimates should be working. I think 82 cents is fine on triple QY, but it's very early. JEPY at 72 cents. A lot of people will be happy with that. 76 cents on IWMY would make some people mad, but it's early. You know, the way averages work is the more numbers you work with, you know, the law of the large numbers and the law of averages kicks in. And that's just the way it works when you have more numbers. So but also the numbers will get more accurate as we get closer. Okay. Let's check out the charts and see where we're at. Where's the chart at is what we want to know. Where's the darn chart at? Maybe I closed it. I did. My apologies. This day's been pretty boring as far as the charts go. I just made a video on a GameStop option trade I did, and I thought it was it's a cool option trade. I'm in love with it. If you guys are option traders, watch the video. If you're interested in complicated calendar spreads, but if you aren't an option trader, don't watch it. It won't be for you. But that's what I've been doing all morning. Okay, so let's look at the cash markets. We're going to start with triple QI. They trade the NASDAQ. That's the daily NASDAQ. Golly, look at that daily NASDAQ. So far on the daily bar, even though we haven't really gone anywhere, where we're still making a higher high and a higher low. Okay, so now we're going to zoom in. This will also be our second close outside the Bollinger Bands in a while. This could set off a major freaking rally. Not that we already haven't had one, but sometimes it can set off more of one. We'll see. We shall see. I was saying last night, the way the market works is an object at rest stays at rest. An object in motion stays in motion remains in motion unless acted on by an equal and opposite force. Something like that. I remember that from some science class I took somewhere, but that's the way the market works. The indexes work, especially. Okay, so NASDAQ is right in the middle. Triple QI is right. That's why it was in the money a little bit. The in the money amount on the 5-minute max spreadsheet is the distance between the top line and the current price. That's the in the money amount. The reason IWMY was losing money is because the in the money amount, remember, IWMY trades Russell. We'll look at the Russell 2000. Okay. The in the money amount was more than the distance between the top line and the bottom line, which represents the option that the manager sold. So this is a 2070. And the bottom line's around 2059. So this cost $11, $12 or something. They got 11 or 12 bucks for that option. Let's look. They actually got 10.19. And right now it would cost $16 to buy it back because it's $16 under the strike. See, whatever you sell the option for, the $10 is the buffer. It comes off the top, it comes off the strike, and that's where the market has to get to before you lose money. So that's why when you sell an option, you want to sell an option for as much as possible. That's one reason you want to sell it, because it makes it where you don't have any downside risk. Or it makes it where your downside risk doesn't start till later. It delays your downside risk, buffers your downside risk. In theory, if this option was priced high enough, it could, if this 77 strike option was priced at $77, you wouldn't have any downside risk. Anyway, that'd be unrealistic though. Okay, so now I want to look at the alternative, the other funds. Let's look at TRES. TRES is kind of having its day in the sun today. I noticed it was up. It's still down for the year and month, week, everything, but it's kind of popping up. So TRES trades TLT. Here's a 30-minute chart of TLT, which is like the SPY for the bond market. And the bond market's been blowing up lately. Okay, so when the bond market goes up, TLT goes up, what does that mean? Bonds are going up. Bonds go up when interest rates go down. They work inversely. Price of bonds, price and yield are inverse on bonds. So when this is going up, it's also a good sign for the market. People usually, when bonds are trending up, they try to get in the market, and they try to, lots of times they use the opposite signal to get out of the market. Okay, well, now let's talk about oil, because we have this USOY. Defiance has this USOY. It's a short put fund, so it's the same thing as triple QI. It just sells daily puts on the USO index. USO is the SPY of the oil business, pretty much. I mean, that may be kind of an oversimplification. If you guys have a better way of thinking about these ETFs, let me know. But what I know about them is they're very liquid. They have very liquid options, and you know, they make good. These kind of ETFs, USO and TLT, make good ETFs to run strategies on, like straddle strangle swaps and like, you know, covered calls or ratio diagonals, because because they're very liquid and their price moves up and down quite a bit, you know, meaning they're volatile. So they make a good use case for a bunch of these. Okay. So USOY. So now let's go over here to the buffer report, and we'll look at USOY. All right. USOY is not on this one because this is the month buffer report. Okay, but this is interesting. This is from last deck day till this deck day, declaration day. And I'm going to have to say TUGN and triple QY are killing it. Look at that outperformance by TUGN right there in the middle of the graph. Now I'm going to give honorable mentions, you know, to a lot of them. A lot of them are doing great. IWMY had a great month, as did ULTY. Really, the only disappointing month was USOI. Now, I mentioned that Defiance has USOI. The reason there's not a bar here is because this didn't trade for a month. This has just been trading for 2 weeks now, I think, a week and a half, something like that. Okay, so here's the buffer report on the individual names for the month, from declaration day to declaration day. So it was, you know, the story of it was a heck of a month for a lot of stocks. It was really a heck of a month for all the indexes too. Look how well the indexes did. Stocks were the same story. Not so much Sky and Dizzo, which of course is Square, and which of course is PayPal. Well, it's not Square. It's Square's high yield fund is Sky. PayPal's its own. It's PayPal. It didn't have a great month either. It hasn't been a great month for those kinds of stocks. OARC, PayPal, which is related to, you know, PayPal. OARC's related to ARC. Sky is square, or block is what I meant to say. Square or block. Dizzo is Disney. You know, even Amazon pulled back a little bit. And AMZP outperformed the benchmark on the downside. Now, that's the curve fund. I'm not talking about curve funds. They're nice funds. I did notice that AMDY did a lot better on the yield max funds. So my first thought is it did so much better, there's probably a data error. But in any event, it's because it's a different company, of course. Duh. There's a data error in my brain. AMZY. Okay. AMZY did do better than AMZP, but not as good as AMDB, not as well as AMDY, I mean. All right. AMZY, which is the yield max fund, sells weekly covered calls, is down 2.12%, whereas AMZP, which is the curve fund, is down 3.41%. Like I always say, the monthly strategies, which a lot of people love and they're great, they're better on the way up. On the way down, they don't provide the buffer that the weeklies do, and then the weeklies don't provide the buffer that the dailies do. Okay. The counter argument to that is the dailies the weeklies provide more of an upside cap to the NAV than the monthlies do. And the dailies provide more of an upside cap to the NAV than the weeklies or the monthlies. So there's trade-offs for everything. All right, so looks like a good month. Now let's go in here. Let's zoom into the 1 day. 1 day. The high yield changes is in blue, benchmarks in red. So on a 1 day basis, USOI and USOY, which are the USO related option trading funds, doing really well. We got to give USOI the fund of the day right now at this point in the day, but look at all YMAX just killing it. TUGN has just been killing it almost every day lately. Of course, FEPI's a perennial powerhouse. And also, I didn't adjust any of these for dividends, but the computer's supposed to do it for us. But if any of these are way off, because we have had dividends in all these recently, it's just the dividend, or the computer didn't catch it. It's supposed to adjust it. All right, so over here, the standouts would be Tesla today, which is great to see. Did we look at Tesla? Let's look at Tesla, Coinbase, Nvidia as far as their stock charts go. We were just about done with the buffer report. Boy, look at that. That's nice. Okay, so, the top line is max profit, right? They're at max profit on this strike. If they keep going, they can get max profit on this strike. Nice job. Nice job. We also follow Coinbase because of Coney. And these guys, their strikes blown out. And I was saying in this morning's update, I think they're just going to wait and roll them into next week, take the loss. It's actually not a loss. It's actually max profit. Remember, max profit's top strike or above. I think people forget that. When it goes way up high above, it's an opportunity loss, but it's not an actual loss. When it blows out the strike, it's just an opportunity loss, which is still bad, which can be as bad as a real loss, but it's not an accounting type loss. The accounting, you're maxed out. You're maxed out. You're maxed out on whatever the trade can do when you're above both strikes. Okay, so see what Mister's doing. I bet it's blowing up too. No, not really. All right, these guys have like 6 strikes. When the stock trades in the thousands, it's easier to ladder strikes because on a percentage basis, the strikes are way closer. And so even though they sell strikes that look like they're like a little bit apart, they might both be the 30 delta. One might be the 31 and one might be the 30 and a half or something. And that happens on the very expensive underlines like Misty. But the good thing about that is the managers can take advantage of that phenomenon a little bit, and they can spread the strikes further apart. What haven't we looked at yet? I guess we've looked at all of them. Coinbase, Misty. All right, well, let's go back to the buffer report. I ended that kind of abruptly. So on the daily buffer report, you got to give the underline of the day goes to Pi, right? That's crazy. Let's see what's going on here. Wow. That's something else. That's something else. All right, guys, I'll be back this evening, and we'll see how these things finished up, and we'll take a look at some other stuff. I was looking, if you get a chance, watch that option, the option trading video, because I was finding a short squeeze candidate, which is what GME is. It's short squeeze plus meme, plus it's in the news. But that's originally how it started, is because of the short interest. Well, what this plots is a short interest ratio. So you could see on a relative basis which companies have a really high short interest. So, and lots of times it's ones that are just getting the shit beat out of them. Like I found one over here that was just straight down. Yeah, look at that one. They tell me the shorts aren't on that one right there. Now it's turning around, and with all those shorts on it and they covered, the theory is this, this could be a good pick. But anyway, I'm in love with those straddle strangle swaps. Watch the video if you're interested. That's fine. But I'm looking for one of these maybe as a look at Best Buy today as a short squeeze candidate. That also that the GameStop people, or not GameStop, that the Reddit crowd's gonna get into. I guess I could just go to Reddit and see what they're talking about. Anyway, I just wanted to see if we could see it here. I thought this is kind of interesting. If you look at the one-day performance, this kind of gives you the story of the day. It's the healthcare and the consumer stocks. Google, Amazon. Money's coming out of the semis today as far as NVIDIA goes, and some of these other semis going into these consumer stocks. Eli Lilly, Johnson & Johnson, Big Pharma. All right, guys, I'm excited about this trust trade. I'll let you know whenever these guys take this trade off, whenever they rebalance. I'll let you know how much they made, and we'll look at their strikes for next week, and we'll probably start following the strikes on option strat again. All right, guys, I appreciate you guys being here. Have a great afternoon. Like I say, I'll be back this evening, and we can see how everything finished up. Thank you so much for watching. All right. See ya.